Hey there, it's Saturday, August 30th, and Texas just lost to Ohio State in a game they didn't. God, they gave me Dallas Cowboy vibes. It's really sad. I'm really concerned about this coach now. Anyways, whatever. It is what it is, right? The market is still kind of boring. Some people, I guess, might be concerned. I've seen this too many times. I just have to remind myself, we've been going nowhere but up since I got in. A year ago today, we were, I think, somewhere around 60 cents. We're at $2.80 a coin right now. XRP is sitting at, yeah, exactly $2.80. And, these are the good times. Now, the thing is, a lot of people get panicked. They might have put in a few dollars when it was at $3 and some odd cents, and they're thinking, wow, I'm losing money. Just look at the chart. A year ago, it was 50 cents. 3 years ago, it was in the 30s. 4 years ago, it was in the 20s. Just depends on how much you bought and what your time horizon is. Now, if your time horizon, if you're, in other words, the time you get into, the time you think you want to get out is short, this isn't the space for you. The green days are very few. I mean, not even 10% of the time in crypto are you in green days. It's rare, but they're huge though when they happen. However, what makes this the good times is that these are the times that you pray for when the market starts to moon and different projects start taking off, and all of a sudden you see something with 50, 60, 120, maybe 100, maybe 200% gains, and you're thinking, man, if I would, I'd like for it to go back down so I can get in on this thing. These are those times, and I want to demonstrate something to you. Let's take a look here. That's your fear and greed index for CoinMarketCap, and as you can see, it's at 39. When it hits 30, that's prime buying time. But there's nothing wrong with stacking a little right around here. You don't want to start investing in crypto or any market when the fear and greed index is over here. When this is way over here, this is when you can consider getting out, exiting, or maybe just staying put, depending on what you want to do. But this is the case way over there on CoinMarketCap, as you can see right there at the top left. I think there it is. Boom, CoinMarketCap right there at the top left. And it just gives you a little overview. And this gives you the temperature of the market right now. And so a lot of people just get a little bit panicked. And I just have to say, calm down. These are the good times. You're going to wish you had these opportunities in 3 months, 2 months. I want to say October is when you're going to really start wishing you'd bought it right now. Just imagine, XRP is at $2.80 right now, and in about a month to a month and a half, maybe it hits $4 or $5. Man, you're just about doubling your money just like that inside of 6 weeks. You put in 10K, you might have closer to 20K, and on and on. That is a psychology, that's a thinking you have to have. These are the exciting times. This is when I'm excited. I've added a few things. This is when you do it. If you're adding when the market's at its top, then you're going to be what they call exit liquidity. You're going to be the new money that people who sell are going to take and put it in their pockets. And you're going to be sitting there waiting a long time before you get any of that back if you buy at the tops. So that's not a good idea. It's better to buy at the bottoms. Your return on investment is better. And just a reminder in other news that as of now, there are 10 publicly announced XRP treasury companies. And you can see them all there. But the two that I want to really point out are like this one down here at the bottom, Everything Blockchain. They're going to be using Flare to create yield off of that XRP that they're going to be buying. And the other one is Vivo Power. They're going to be staking it over with Flare. And I think you're going to start to see more and more of these projects do this. You're also going to see a lot more announcements on these XRP treasuries because they're going to be something to behold. Not only will the coin go up in value, but those yielding projects, I think, if they can trust $12 million of their coin on Flare, that's going to generate a lot of confidence. And I think that's going to bode well for the market and for that project Flare. And so just FYI. Also, a lot of people like to point out market cap. The market cap doesn't justify some of the prices that you're thinking may occur, which is in my case, it's a guess. We're all guessing. My guess is between $27 to $33 this bull run. Some people guess a whole lot higher, and I can't fault them for it because I know what's coming. Market cap does not apply to a nascent, a young, a baby technology because it's got so much to grow. And this lady, I think she's nailing it here. And again, I'm trying to share a lot of things from government entities, insiders in Wall Street, in banks, in the banking system, inside of the crypto society over in in Silicon Valley and around the world, and over in Singapore as well. But she says, or digital asset investors posting that all the money, crypto is the asset class to swallow all other asset classes. And that's why market cap doesn't apply, because everything will be converted to this. So all that you see, whether it's real estate, intellectual property, stocks, commodities, any of that stuff is going to get tokenized, because you're going to need to be able to trade it 24/7, 365 and monetize these assets. And crypto is the right tool to do that with. It says, today the market is 3.77 trillion. That's the crypto market. He says, don't be fooled by these silly little market manipulation events. Trillions are coming. And it's true. This sell-off got triggered by there was a sell-off in Bitcoin and Ethereum here by some big wallets, which goes to show how centralized they are. You get a few people to sell it, and all of a sudden it triggers a domino effect to the rest of the market. Oops, I think I missed. Sorry, guys. So let's take a look at this video and tell me what you think about it. It's pretty interesting to watch how they're talking inside of their own little boardrooms and I guess Zoom meetings or whatever they're having over there. But they do share the knowledge, and they do try to, I want to say they're trying to spread the word, so to speak, that we're moving in this direction and this is why, just so that they all get the 411 within the industries, because they're going to need to be able to interoperate with each other, so they want to be on the same page. So let's take a look at that, like, share, bookmark, and let me know in the comments what you think. Till next time, adios amigos. See you on the next one.
And, we're starting to see growing enthusiasm for tokenization of equities, tokenization of bonds, tokenization of ETFs. Those are all great options, but it's also a chance for us to say, well, how do I want to build portfolios in the future? How do I want to make sure that those portfolios can be aligned to individuals? We've seen a big move towards separately managed accounts and direct indexing in the traditional wealth world, right? Well, tokenization makes both those products much easier to deliver. I can have a token of tokens, so I can tokenize every equity in the S&P 500 and then also put all 500 equities into a S&P 500 token. And I could have the S&P 500 token, or if you asked, I could unwrap that token and you could have 500 individual tokenized pieces of equity. And you can see, once you get that degree of transferability, you can start to do all new things with portfolio construction. So we're very excited about what we're going to be launching over the next year. I think it's going to really, open up people's ideas and open up people's thinking about, with new rails comes new opportunities to enhance the way that we've done things traditionally.
Yeah.